Good morning. Welcome to Options Tender. It's Thursday. Happy Halloween, everybody. October 31st, 2024. So we have on the lower time frames a beginning of a bear breakdown. So we're going to go discuss what's changed in the market and talk about it in a traditional sense. We're going to look at targets and talk us through how this might play out. Things usually don't just fall off a cliff right away. I know we had a Corona crash. That was probably the most devastating move I've ever traded, but I don't suspect that, okay? So we need to still build this certain amount of market structure, but your probability seems to be best on the downside at this point. Okay, I think we've gotten our turn. All right, so we're doing this video intraday about 10 a.m., 10:21 a.m. Eastern Standard Time. If you're interested in getting these videos intraday, please consider becoming a YouTube member as a supporter minimum, and then as a individual analysis as a YouTube member, you can get trade alerts for both of them, and then individual stocks every once in a while. I don't do them all the time, so I think it's only $3, $5, something like that. But okay, let's get down to business. I like to. There's a lot of information, so play the speed at 1.25 or 1.5, unless you have plenty of time to absorb all this. So we have SPY on multiple time frames. We're starting off with the month. We have 2,000 top, 21 top. And we're looking at the top here at 2024. On the monthly time frame, nothing's changed as a stance. Okay, so we have today is the end of the month, so that's why it's important to look at this candle. It's likely that we'll have this reversal candle here today with negative divergence playing out on the monthly time frame. So we don't even have quite a sorry, that's my chihuahua just okay, sorry, that was one of my 6 animals. So on the monthly time frame, we have a divergence on the RSI and the MACD, and we're just now getting a histogram change here. So everything's early here in the monthly time frame. We're just right at the peak, so there's plenty of moves coming into this downtrend. Okay, so don't get anxious. Don't think you didn't make the move, and we have one candle. Okay, and it was the toughest candle in my opinion. So let's move down to the weekly. On the weekly time frame, in a traditional sense, we came back up to the top trend line here, reversed off of it, and we're getting a little bit of a reaction here because we're at the 8 EMA. So the momentum in a technical stance is still up. Okay, we still need to break this 8 EMA in the weekly time frame. We have our reversal. If we break down from the 8, we still have work to do. On the 20 moving average, that's our trending indicator, and the trend is technically still up. So we're still above that 2,000 trend line here. So we're still in the stance here, right? But you got to come from the top from somewhere. Tops don't start bearish; they start bullish. And so we're getting right here, just about a point where we're getting a crossover. So you see the negative divergences here. You have 3 peaks. Same with the RSI, starting to play out, oversold, starting to move. And here we go, folks. This is a big one. That's a slow stoke getting a sell signal on the weekly time frame. Onto the other board. So we can look at our original target here that we hit, bounced against twice, and got above. So, I mean, again, technically we're in that stance. We're still above it. So no real breakdown on the weekly and monthly time frame. And it just so happens it's going to coincide by the time it gets down here. It's going to coincide with the 20 moving average. So in my mind, the near term, and by near term, I mean maybe the FOMC, the election, few days, a week, we could probably see this zone, the 562. So just kind of keep that in mind, because that would make sense. If we break down from the 8, all we're doing is backtesting this breakout zone. And we're looking ultimately for a fake break, but we'll probably see a reaction off of it. And that's probably where we'll get our first sharp bounce. Okay, so on the weekly time frame, we have zero structure to the downside. All right, we have an initial move. So if we can get down to that breakout point, get a bounce, and then we'll have something to work with. Then we'll have a low, a higher low, and we continue down. And possibly the time frame I have right here, I think I might have to adjust this ratio, but that doesn't change anything here. I have December 29th. So we don't have really anything going on until about December 29th. So is that going to be a bottom at that point, or are we going to get a bottom and this is the next top? We'll see where price is on the end of the year here, but nothing to show with time relationships on the weekly. On the daily time frame, on the daily, we have a bearish rising wedge. All right, in this, we now have, I moved the line to the bottom of this correction here. So that will be a larger breakdown as this point. And we're not quite there yet, but we'll keep an eye on that. This originally was from this low here, but clearly we made new highs. And so it doesn't matter where you put it, because we have the low here anyway. So you can have that low and that low. It creates your trend lines. So we broke down from the original one, back tested, and just kind of back tested all the way up and formed another wedge. And we filled out that wedge, got to the top with confluence here, and we're breaking down. We had our original target. This is where I started to get bearish here. Right here at 580, that was the top of our target. We started shorting there, and then got above it and held above for so long here. You see a couple weeks. And we're finally breaking down from that point. From this red, I'm going to take that out now. And what we're really kind of looking at is this trend line. Now we broke this, to break down here from this low and this low. And you see price accelerating at this point. Now, whatever the catalyst may be, on a traditional sense, we broke down. So on this daily time frame, we're starting to get this negative, this bearish market structure here on the daily. Okay, so we have our high, our all-time high. We have a low, a lower high, and we're starting to accelerate into what I call that wave 3. Now, there possibly could be one more bounce before the breakdown. I think that's less likely. I think this should play all the way out, and we should see some sort of wave 4 eventually. And again, this looks like a zone. This was a ascending triangle that we broke out from. And I think this is likely, I want to draw a purple line in because I want it to be more effective for the eyes. This, when you're doing traditional technical analysis, it's all about sight, vision, pattern recognition, and that's where your supports and your resistances are. And so this is a major resistance, support several times, and we're going to come back into that zone. So this, to me, could either be a 1-2, 1-2, and then much further structure. But I think if we're already oversold in a sense, I think we'll need to see some sort of bounce here, maybe some negative, positive divergence, but we're already in an oversold condition, which doesn't mean a whole lot. Again, so to get to this point, maybe we bounce first and then head down there. I think it's more likely we go straight down, maybe consolidate a day, then get down there into Monday or Tuesday. And if this happens to be election or FOMC, then I think we'll get our bounce off of there. And it might be a nice sharp bounce. And then we break down from that point. And that next drive down should be much more severe. Okay. So notice we're starting to get into this zone. And once you get into a specific, we bounced off of it before. You have some volume in here, and now we're getting into it. So it's very natural to get through a zone and then test the bottom of the zone. So that works out perfectly at this point. We're not going to get there today, but maybe tomorrow, Monday, Tuesday, and then that would just be so convenient, right? Turn around Tuesday next week, where we get down to about the 565, and of course, there's a zone, and so we could close this gap here. We have a gap at about 562, and so keep that in mind. We can go all the way down, close the gap, and that's when we'd be looking for a bounce. But we have that 20 moving average that I was talking about on the weekly. Okay, so we hit all of our well, not all of our targets. We hit our major target at the 127, got above it, and hit a minor target at the 138. Okay, and now we're reversing. We broke back down. So this is a point where I think we retest all-time highs. That's where that 100% is. And so I think our business is done here, unless something extraordinary happens to the upside. And remember, we have two more catalysts, and I'll talk about this more when we get to the Qs, but we have two more catalysts tonight for the Qs, and we have employment situation, which all eyes are on that in the morning at 8:30 before the bell. So we're in this cluster right now. I believe that cluster was a high, and now we're reversing. And so we'll look into 11.5, which is the election, and 11.11. It's another little cluster there. We'll see what happens. Maybe that's just we'll see when we get there. But 11.5 would be our next number we're looking at. So I can get rid of these. And that's turnaround Tuesday. So it's looking more to me like we'll just continue this downside into Tuesday. And I can probably even look at it something like that. And then at that point, I don't know if that's the right price. Okay, this might be right here. Might be that. I think it's more likely because we're starting to get oversold on the daily already. And maybe that we get our reversal back. What is that? 5, 6, 7. So maybe the next week after, we have a week of consolidation and we have a bounce. And then we start our real structure to the downside into more clusters of time. So this is kind of how it's starting to play out. This move should be pretty sharp, but it could play out something like that out here. We'll keep these clusters in mind as we get there. So this seems to be, since we're looking at our indicators, we're already oversold. Slow still has work to do. So I think we have more business to the downside. We're crossing over on the MACD. So we have plenty of movement of room to the downside overall. The momentum's just starting to head downward, okay? So tons of room to continue to the downside as a trend. But we'll probably see the slow stoke get into oversold as we come into the 562 to 565 zone. Let's go down to the 65. Okay, so here's the traditional look. We had this first breakdown, this initial breakdown from the wedge, held on to the secondary wedge, back tested, and broke down again. So we officially had a downtrend here, and now we're starting to play this out to the downside. All right, so this week, initially, I think it's very likely we hit this 568 options expected move for the week. If you're not familiar, I do have a video for that. Okay, so I think we'll get attracted to this at least by tomorrow. Maybe we gap down into it tomorrow, and perhaps going into Monday or Tuesday, election on the 5th, FOMC on the 7th. So let's see, am I right? We have I just want to make sure the dates are right. So next week we have Tuesday's the 5th with the election and FOMC. Here's how you use the Thinkorswim. You can go to Market Watch, go to Calendar, Econo Day Events, and I believe FOMC. Here we go. It's on a Thursday. All right. So we have FOMC on Thursday at, choose it, 2 p.m. All right. Usually it's on a Wednesday. It's kind of funny. It's probably moved because of the election. So 2 catalysts going into next week. I presume that these will be a low. And in price, it could even get down to here. Okay. I don't want to solidify the fact that this is a good, I think we'll at least get a reaction off of these highs here. But at the same time, we have to look at these structures that we have forming. All right, so this is a good time to go to this board. So our major sell signals happened. And now this is, I know this is very busy. So we're just now starting these structures to the downside. So I'm using these time price relationships. And right now they're kind of thin at best because I only have 2. I have a high to low, a high to high, and then I'm going to work with, once we start getting larger lows and highs, I'll start using them more often instead of these very shallow short-term moves. Okay, so initially we have in the yellow a wave 1, a wave 2, and now in the white we have a 1, 2, and then likely a wave 3 would make it to this 162 for the white. But I'm not going to get caught up in this market structure too much, because when you get down to these lower ones, they seem to stretch out and get much more lengthy. And we had our retracement here. So I don't want to focus on what's happening here. All I want to focus on is that we have a 1, 2, 1, 2. We're stretching out in wave 3. And so we should see some sort of, maybe it's starting to happen right now, some sort of small bear flag for wave 3 into 4 in the white. I might as well put them out there. 3. And this is what I have to do. This is what I have to do every day. So I hope this is very educational. I hope this helps you to learn how to trade. And as this develops, I'll try to do the same thing. And so move this out a little bit. So ultimately, we're looking for wave 3 into whenever to hit this 565, okay? And so that's our former high. You see that 100%? So it's measured that this yellow 1, 2, it should be typically at the 565 for wave 3. So that tells me already that this might go lower. But we'll look for some sort of flag pattern as our wave 3 and 4 come to here. Should be pretty shallow. And then our wave 5 will be into that wave 3. So that will complete this structure here. All right. So wherever time ends up, this could end off here. So this is why I think we continue lower at this point. Now, coming into perhaps the election. Maybe this is where wave 3 ends, is at the election on Tuesday. Turnaround Tuesday, we get a shallow wave 4. It's a 40% bounce. I know I said shallow, but 40% is sometimes if you have lower, if you have lesser dated options expirations and you try to wait out a 40% move, that's a tough one to hold on to, okay? So by shallow, I just mean your typical 1 to 2 is 50, 60, even 70% retracements. And your wave 4s are typically a 20 to 40% retracement. All right, so we should get a reaction off of this former all-time high, and also this the triangle breakout. A bounce off it, reaction, and then a wave 5 continuation. And I think I have a wave 5 somewhere. And it will probably go into that 562 zone. Not very deep. Just likely. I don't know this. And we'll look for reversals. We'll look for into the 3, into 5. We'll look for positive divergence. And then we'll look for a fake break back out of this 565, because at this point, this should just be a larger degree wave 1. Okay, and we'll take all of these little structures out of here and we'll put a 1 here. We'll tag a 1 here. Then we'll look for some sort of correction into wave 2. And like I said, a wave 2 is typically pretty, it's usually a zigzag. Can be a flat pattern if we need to waste time, but it's usually pretty sharp as a 535. So that that could backtest, depending on this move. And I don't want you to get stuck that it's going to be shallow. If there's a catalyst, this thing can continue down much further, and then we'll just be looking for signs for a bounce. Should be a pretty harsh bounce, a snapback, and then the big move should happen after that. So if you're in near dated options, start taking your profits into this 565. I think this is a high profit, a high probable trade to come into here, and then things are going to get kind of wacky unless they just what I worry about is that this starts to stretch out, and wave 5 actually it could be longer than wave 3, as long as wave 3 is not the shortest. Wave 5 could extend past the size of wave 3, so that is the caution. So we'll look for time, price, and positive divergence in order to go along. And when we're playing these bounces, we're not going all in. The trend is to the downside, so there's no guarantees how big our bounces will be. Qs. We're breaking down. This is a major breakdown. Okay, so this is another thing we'll have to look out for. We're almost to the options expected move. It's very likely we can continue through it. And again, this probably could close the gap. And then in a traditional sense, we're just looking for a breakdown and a back test. And it doesn't mean it has to come back and touch the wedge, but the breakdown of the wedge, a back test, maybe into resistance. That would make sense. And we'll see on the higher time frames, we'll see the 8 EMA and the 20 moving average as well, coinciding with these resistance and supports. So as we move down, you notice we have very shallow, very small market structure in here. So I'm going to count SPY more in this one, because this is just kind of just a straight line. And we'll look at this straight line and we'll look for a nice bounce. And then after that, we can count the Qs because they will be much more efficient. And we'll get our lower high. Maybe we even come and close these gaps. Who knows? And then continue down with a much more devastating move. This move is nothing. This is just the initial breakdown. I don't really have any projections here. Clearly, these are former highs, so we're having a little bit of pause here. So this could be a shallow little. You see, I have the 1-2, barely made a little 1-2 in there. We're gonna look for a 3 and a 4 in there somewhere, but I think it's gonna be very hard to do. But notice that this is a lower high already. So we don't need as much market structure. This thing is just going to be leading the way for now on. SPY has a brand new all-time high and had to create its lower highs in just market structure. So anyway, we're pausing right here. I suspect we can get to this 473, which is a former 62% retracement. And if we go back to the traditional 473, that's the 471, 472 will close the gap zone. So that's what I think that looks good to where it could come down all the way to that point at this point. IWM. IWM is going to have large moves in itself. I don't think it's going to lead necessarily the market, but it's not going to be a hideout. I'll tell you that. So we have our lower highs. We have an all-time high, lower high, lower high, lower high. Okay, so the structure is negative. We formed a bear flag and we broke down from that bear flag. So I think the clear spot for this are these lows. Resistance. Resistance. So a clear spot right here would be about the 216 if you're trading IWM for maybe a meager bounce, because these structures are really starting to break down. And so I don't suspect these bounces will be very large at all. We're getting a little pause because of the gap support. We close that gap. And we'll be looking for this trend line around 216 or so before we even think about taking profit. I'm in the inverse. I posted that in case you're not familiar. TZA is the inverse IWM triple leveraged. So that's what I'm using out into like the 22nd or something like that. But start taking profits and start hedging to the upside when we get into these supports. SMH. SMH, again, we have our high, lower high at the top of the bear flag, and we're breaking down. So the clear spot is getting to the bear flag bottom. But with this one, I have more of a measurement ability. We can do this with IW. We just don't trade it as much. It's just so wild. So if you're trading it, I don't want to leave you out of here. What we'll be looking for is this move here. So this is where I wasn't sure if we were going to get to that 786 or not. So that's why we had our arrow down here. Now we have the top of wave 1 to the bottom of wave 1 to the top of wave 2. And that gives us a possibility for wave 3. It's likely for wave 3, you'll get those shallow little bounces, very shallow, but wave 3 should be all the way down here to the 209. Okay, so don't get me wrong, this thing's gonna move. So if you want to trade it, go for it. It's bearish. It's also in a bearish setting. It's just a lot more unpredictable. So my position sizes are small when I use. So this bear flag clearly has a lot of room to the downside. But in the near term, we'll get a reaction off of the bottom here. I think it's likely just to break down though. And then we have gap support. But the ultimate spot for this wave 3 in the near term, we already drew out. It's 162. How do we get that? This initial wave 1 all the way to the bounce top for wave 2. And then our wave 3 could be around the 230. All right, so plenty of room, another 10 points to the downside, even before we consider this to, in this one, you can see that the real shallow bounce here. We have a 1, 2. Now we're in wave 3, probably a little 4 and a 5. Okay, that's going to be led by NVIDIA. So NVIDIA has plenty of downside. And then after this, do we just get a shallow bounce in wave 4? it's hard to tell. SMH could continue moving. As you see, this is a large structure here in time. It could just continue to move. It could go to the 262 if it wanted to. All right, so this is leveraged. Although I'll look at these targets for SMH, I'll base most of my profit taking off of SPY and QQQ, and this will lead the way on those. So I hope that makes sense. VIX, and tomorrow you guys will probably look at all of these or most of these on the daily time frame. So here we have the VIX. Now we have a big area here we're coming into at the 22 to 23 zone, and we're looking to break out from that. It's as simple as that. We've had this spring get so tight, and finally we're breaking out of it. And I don't think the employment situation is going to stop it. I think it's going to accelerate it until we get to some of these levels. Maybe we come to close the gap here, about 28 or so, and then get our retracement, probably back to the breakout zone. So you could consider this ascending triangle if you want to. You have those 3 taps there, and we have this support here. And so we're banging up against it, banging up against it, banging up against it, breaking out, and maybe back test it, and that's when we get our wave 2 in the market that I was talking about, okay? And then we continue to move further. Wave 3 probably accelerate past here. And then the VIX should start receding into lows into the end of wave 3 and wave 4. I don't believe VIX will form a bottom. It will probably start breaking down before the bottom in the market's in. And by bottom, you guys, I just mean that's the first major wave. All right. So I think I have this mapped out. Let's see. I think I might have this mapped out on one of these time frames. Okay, so I don't SPX. The monthly. Okay. So I kind of have this mapped out here. What I might suspect, and again, these brackets, that's not my work, so I'm not going to go through those brackets. If you want to use them, fine, but it's just not my business. So I'm trying to learn them right now, and Ask Slim is the website that I'm learning off of, and I don't try to hide any of this from you. I just it's not my work to take and show. So 3, 4, we're getting the top of wave 5. I believe this structure should be something like a 1, 2, 3, 4, 5, all the way into this devastating move and to these lows. That's kind of what I'm talking about. So this first wave, long, big wave, we're probably probably looking at 1,000-point move. All right, on SPY, that's a 100-point move on SPX and a 100-point move on SPY. Okay, so if we're talking a 100-point move, this is probably the first initial move. If we're looking at 470 something for just a wave 1. All right, so all this that I'm talking about has a lot to play out. And that could possibly be all the way here. And I don't know the time frame, but all the way here just for the initial move. But you have to have that market structure and blah, blah, blah that I'm talking about all the way down. And that's just the first one. Okay. Then we have a bounce and then so much more to go. So just be patient and just play the downtrend at this point. We'll get more details on the higher time frames. Let's just, play out what we have so far in the lower time frames and be very diligent on these moves, because that's what we're trading. So I'm looking for the initial micro degree wave 1. And I know there's other terminology for degrees of Elliott waves. That's not my profession, okay? This first structure, boom, into election, bounce, and then break down much steeper, and then bounce for a 5-wave move. We're looking for a 5-wave structure. Maybe I'll just put that in for you so we can... And this is not where I project. This is just placements. And if 1 is equal to 5, and we'll have something like that. Okay, so that will be just our placeholder for now, and we will adjust them every day. Every day as we get more information, we'll adjust these to how I think it'll be. Okay. Thanks for joining us, you guys. Long video, but super, super important. We're just getting started. Hold on tight to these puts for just a little bit longer. We just got our first initial move, and then we'll probably hedge into the bounce after elections or FOMC, and then a much larger move to the downside should happen after that, which is a 5-wave move within this one too. All right, that's a heads up. Do your Elliott wave research. Have a good day. We'll talk to you soon.